And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, and welcome to the Market Forecast. Today is Monday, October 18th. I'm John Hoagland. Thanks for trusting me with your time. Back in 1987, October 18th was a Sunday, and everybody that worked on the trading floor, everybody in the world knew it was probably going to happen on October 19th, Black Monday, 1987. I'm hoping that's not in the cards for us anytime soon here today. Have a cup of coffee, relax, and let's see what we're looking at this morning. I just saw something that I'm sad about. I guess Colin Powell has passed away due to COVID. His family has reported. I just saw that in the news this morning. Our deepest condolences to everybody that is a friend or colleague of Colin Powell. I always liked him. I thought he was a good man, and he will be missed. As far as the markets this morning, of course, it's the fresh page of a new chapter of this year's book in trading. We're going to try and write a good one for us. Looking at information due out this morning, 8:15, in just about a half an hour. We've got industrial production due out. 9 o'clock Central, housing market index due out also today. As far as this week is concerned, well, we've got job opens, labor turnover as usual on Tuesday. Nothing all that impactful on Tuesday. We do have CPI numbers, and hey, no, this is last week. How did that happen? Industrial production and housing market index today. Housing starts and permits tomorrow. We do have some talking feds, a lot of talking feds speaking this week. EIA's petroleum status report on Wednesday. The beige book comes out on also on Friday at 1 p.m. Central. As usual on Thursday, jobless claims. We have Philly Fed. We have existing home sales and misleading indicators on Thursday, and PMI composite flash. We'll get a look at what the purchasing managers index is looking like on Friday. We also know that we've got the earnings season ramping up this week, so we've got stock indices opening cautiously lower. China, it continues to get some weakening signs about their economy. The ECB has looked to starting to raise rates. We have a busy week in earnings. Some of the standouts tomorrow, we have Netflix, Wednesday, Tesla, Thursday, Intel, Friday, American Express, along with scads of others. So we're really starting to come into stride for earnings season this week, next weekend, the following week. Bitcoin. Wow, nice new high up above 62,000 last night, all on hopes that the SEC will quickly approve at least 2 new ETFs based on the cryptocurrency. Crude prices still higher on demand. What are we going to do about this? Up to $83.18 last night for WTI crude. It's going to be an interesting one. As usual, make sure you like, share, comment, question, feedback, and heckle at will. Subscribe to our YouTube channel so you can get notified when we do go live. A brief look at the VIX this morning, up about 7%, but still well below 2017.50. Last I checked, dollar index largely steady at 93.95. And the yield on the 10-year Treasury yields continue to creep higher as we get closer to some of the buyback, cutting back on some of the buybacks, talking about doing that in November, of course. As always, I got to say good morning to everybody. Good morning, Theo, first in the room. You win the prize. Edmilson, good morning. Daniel, Vince, Jorg, Zanul, Zahurul, Zerain, John. I knew, Fred, as soon as the game was over yesterday, that you were going to be commenting on the Bears-Packers game yesterday. And yeah, I believe you're right. Actually, I think it may be 100-1 against the Chicago Bears in his career. At least that's the way it feels from the Chicago side of things. And, you're a Chicago guy. I know you're a Green Bay Packer fan. I don't hold that against you, but it's almost like there's a disdain for the Chicago Bears there. Surprising. Good morning, Angelino. Started the combine. All right, good job. Take your time, be patient, let the market come to you. All the other things that seem cliche but ring so true in trading. Just stay patient. If you get upset, if you get aggravated, if you get mad, that we tend to leave our strategy behind and start over trading and revenge trading. Avoid those types of situations, Angelina, and we'll look forward to seeing your success. Charles, Alfred, good morning. Patrick, good morning. Rob, Charles, James. I'm going to probably murder this name. Sakisi. Yeah, that's good morning. It's good to have you here. That's a name I haven't seen before. Thank you for saying hello, and thank you for being with us this morning. Charles. Laura. Brian. Janus. Justin C. Will. Nelson. Wen. Manuel Caesar, good morning. Nelson Benitez, good morning. Yes. Yeah, my pleasure, Angelina. I'm looking forward to, kind of seeing your path and seeing systematic growth. I think that's really what we're looking for. There's always more that we're going to need to know, more we need to learn about markets and about ourselves. Just take your time and enjoy the process. Don't let your money get mad. Absolutely, Justin. Cam, good morning. So this week we're starting 2 group coaching sessions. We're going to have one today and on Wednesday, 1 o'clock. Both of them are going to be at 1 o'clock Central. There's the link. You can register and see you there at 1 o'clock today and Wednesday. Good morning, Felix Escobar, Cam, and Stephen. Good morning. Lacey says good morning back. Ryan, good morning, Hogue. Back after a week off. Good to have you back. Hopefully you're rested and ready to go. I know sometimes taking a look away from the markets can really open up your eyes. I tend to, be relaxed and ready after some time off. And sometimes it seems like we get so close to the price action, so close to the chart, so close to the markets that we get tunnel vision and we can't see beyond our own noses. And I find that time off helps me broaden that horizon. Looking forward to seeing a good day for you, Ryan. 3 Lions Insight, good morning. All right. We are always going to be checking out from left to right. We go crude, we go E-mini S&P, Nasdaq, gold, euro, 10-year, and the nat gas. Nat gas, an interesting situation this morning. We've got a couple of late spikes. We're going to see those on the charts very shortly, and let's dive in. It is Monday. As usual, I'm going to be very patient. I tend to get ahead of myself or over my skis on Mondays, so I'm going to take it easy. I'm probably going to miss a couple of trades today, but that's okay. Let's take a look at the daily in crude to begin with here. All right. So I'm in December now. The December contract has more volume. You're okay if you haven't switched yet. Just go ahead and switch. We've got lots of space above where we currently are. I was talking last week. Let me see if I can find this. I was talking last week about two swing highs in crude oil. Let me go one day back here, see if I can find this. I'm not going to waste too much time here, but we've got space all the way up to $107 in crude oil. Now, I'm hoping that that doesn't happen. Take a look at what we did on Friday. We had a nice up day. We opened at the low, closed at the high. We had a pretty good increase in volume. That, of course, is partially due to rollover, but overall there was some pretty strong volume on this up move, and we added 20,000 in open interest. Again, some of that is going to be caused by rollover, but it's still encouraging for a healthy upside auction. We've had a very healthy upside auction for quite a while now, quite a few weeks. That big volume and open interest increase on Friday just says people are willing to come in and continue to buy this market. We're going to be opening with a gap this morning. All right, let's expand. So no gap. Friday, we closed the gap to the tick. We've got settlement here at 81.73. We've got all of our overnight inventory pushing us to the long side. And again, we've got an overnight inventory long. We've got gap rules. If we're looking for this market to continue this move to the upside, I'd like to buy a position of weakness. Look at what we did on Friday. We opened, we traded right to the gap close. We didn't close it really on this bar. We closed it later on, but just that move back towards the range from the previous day on an overnight long, the kind of reconciliation of those longs gives us the opportunity to buy weakness. I don't want to try and pick the top in this. I don't know when and how it's going to happen, so I'm going to be looking for, again, opportunities to buy dips, to buy this market when it is exhibiting weakness. There's plenty of visuals down below for us to look at. I mean, we've got naked points of control. Our weekly kickoff low is below. We have, tons of information above as well. Unfortunately, that information goes several years back. I haven't gone that far back to look for naked points of control. We just have to understand that this auction to the upside is healthy. It is healthy. So again, opening out of range, out of value. Maybe we'll have the opportunity to see if we catch the first minute of trade here. We'll take a look at the S&Ps first. But, the opening range trade is certainly a possibility. If the opening range trade is left at the high, I'll take a trade back down towards the range from Friday or even settlement, but I'm not going to marry that. I'll be looking for opportunities to buy weakness. There's always the outside chance when we take a look at the daily chart. It's been pretty ballistic. When's the next pullback going to be? We can see our pullbacks have been large and vicious. So always be cautious about that. Let's take a look at the S&Ps now. We've got about a minute before the crude opens up. Open interest continues to shut off at higher prices. We lost 22,000 in open interest on Friday on an up move on lower volume. Okay, volume very weak. A lot of weak structure down below. A lot of things for us to go back and check. There's no late spike. There is a late spike, however, in the Nasdaq, where it looks like we're going to be opening below that. So take a look here at the 30-minute chart. Last week's high, last week's low, points of control, gaps all over the place, weak structure down below, weak structure, lots of areas for us to go back and retest those important levels. Where are we going to be opening? Well, right now it looks like we're opening in the gap from Thursday to Friday. We've got overnight inventory to the short side. We've got 44.6250 as settlement. Are we still in an area here, or are we still in a sell strength kind of view here? Well, we've got lower highs and lower lows. Now we're starting to put in higher highs and higher lows. Where are the areas to look for opportunities is the question. And I'm going to say, if we start to look lower, if there's no real momentum or news pushing us that way, that we're going to start looking to some of these short time frame levels with which to look for opportunities. Naked points of control, gaps, another naked point of control down here. I find myself really wishing that I had a crystal ball so I could see what was going to happen. Unfortunately, I don't have one. Let's see what we've got as far as the opening range in crude oil here. We know we've got a gap. It's not populating. Well, here we are. Here's our opening range. So far, it's the low of the session. Not thinking about really being that involved in this right now. I don't know why this is not showing that, but it's the way the ball bounces. We just took out the low of the opening range. Nasdaq, a little bit of a different story. One last thing about these equities. Visuals lower. Everything is kind of pointing towards a pullback. Last week we did have a positive week, but don't forget about resilience. If the market does not get new bad news, it tends to just grind higher. Hey, Harry, good to see you. Zarul. Naked points of control are points of control that have not been revisited in the daytime session. We'll see some here in the Nasdaq. Hang on. Open interest also slows. We lost 500 in open interest at higher pricing. Volume wasn't all that bad. What's the direction that this market is attempting to go, and how good of a job is it doing getting there? Well, we had a pretty good up week. 1, 2, 3 good up days. We were unable to get back to or above last week's weekly kickoff high. Therefore, it remains weekly kickoff high in the Nasdaq 15,190, low 14,624, 15,190, I should say. So we've got a little pullback off of that. We had some. We did have a late spike on Friday. I want to show you this. Here's the TPO chart from Friday. So here's the late spike that when we talk about these, this is what we're talking about. There it is. So here's Friday's profile from the Nasdaq. The S&Ps did not close at the high like this. They closed back in the body of the profile. The Nasdaq put in a late spike and closed at the high of it on Friday. So that's a sign that price is attempting to go higher. Where we open today is very important because it may show acceptance of higher pricing or rejection. We're currently trading 15,071 and a quarter. That's below the base of the late spike, whether you gauge the late spike low at here or where the late spike kind of began down here. We're opening below it. That's showing rejection of higher pricing. We're gonna start to again look for in the Nasdaq at the very least for opportunities to sell strength until we can find some sort of sign of acceptance in the daytime frame inside the late spike. Back to the 30-minute chart. Where are we? Well, we've got more visuals down below than we do above. We've got one naked point of control weekly kickoff high, which is the point of control from the all-time high. It was on Monday of Labor Day. Where are we today? Well, we've got some overnight shorts that would appear to have been reconciled. We're inside range. We're inside value. I'm going to try and stay patient. If we can't get back into and accept inside the late spike, which is I'm going to be calling value high from yesterday, value high is going to be an important level for us today, for me at least. Decent opportunity. Maybe we'll find some fish there. It's high of value. It's point of control. Now, naked points of control. Here's a volume point of control that remains unchecked in the regular trading hour session. If price comes back down here and trades to this in the regular trading hour session, it will then be expired. It won't have the same magnitude because what we're looking at with points of control is points where the market was comfortable, where a lot of trade occurred. There was a lot of two-sided trade, and volume points of control obviously were areas where people did a lot of business. It's the highest single volume price for the session. So and markets are extremely visual. Don't kid yourself. When we see something, it means something. All right, let's take a look at gold now. So we had a kind of a major inflection point. We had this trend line here, and then we had weekly kickoff high. We tested it. Did we accept above it? Did we accept below it? Did we just kind of hang around it? We didn't find momentum above it. So then Friday, we tested right to that weekly kickoff high, and we broke pretty hard. You could call what happened on Friday a repair day for Thursday. The volume profile, the market profile was very toothy, very emotional on the move up on Thursday. Wednesday, I should say. This was Thursday. This was Friday. Friday, we just came back and we tested back to see if there was any business that needed to be done on that big move to the upside, a big emotional move, big emotional move back down to a 10-day area of balance that puts us right back into short time frame control. We had longer, stronger buyers or sellers come up here and pretty much tell us, this is not going to work for us. We're selling it. Let's move this market back lower. What's going to happen this week? Who the heck knows? So here is what we're talking about. Wednesday's profile, we had a long overnight inventory, came down, tested, came back up, got back above 1780, which was weekly kickoff high at the time, I believe, and we continued to move to the upside. You see how toothy this volume profile is? There's areas where there wasn't a lot of time spent, a lot of trade occurring. The market comes back sometimes and rechecks those areas where we didn't have a lot of time to operate. We didn't have a lot of time to take trades there. Sometimes the market's going to come back down, come back through those levels. This happened in the overnight. This is Friday's session. Basically a hangover type session. Where are we today? Settlement 1768.30. Back basically in range. Outside value, acceptance of value has us moving higher. A rejection of value has us moving lower. But is there a lot of information? Is there a lot of naked points of control and gaps down here? No, there isn't. We were in a 10-day area of balance here. So the only targets that I really see visually are weekly kickoff low and last week's low, this pink line here, last week's low. So, there's more to look at above. Be cautious. If we reaccept inside value, that'll take me from doing nothing to perhaps looking for opportunities to buy weakness in this market. It's been very strange how our precious metals have been responding to fear. It's almost like the Bitcoin has taken over as the store of value. All right, we got 3 to get through here. We got plenty of time. The euro indecision remains in this chart. Yet, two dojis. We're currently in a doji. We're in short time frame control. We had moving down, bear flag, continuation. Now we've got a bullish engulfing pattern off this low here. Okay, we were looking for a little bit lower, a nice convergence of this trend line, and the weekly kickoff low would have been nice. We're not seeing it. Is this now creating a bull flag? My question, take a look at the 30-minute chart. Okay, this could be a bull flag. Where are we? We are, settlement right here. 116.18.5 ticks. A lot of overnight shorts. When the London market opened, boy, they sure scooped up all those shorts and brought them right back into settlement, right back into range, right back into value. Stay patient. I'm really going to keep my focus on what happens if we get to our overnight high, pretty close to this trend line up here. Are we going to reject it, or are we going to find some acceptance and continue this move higher? Remember on the daily chart, we had a bullish engulfing pattern, and this could actually be a bull flag. If it proves to be one, off to the races to the upside. We're going to see some weakness in the dollar. It's what it's going to take to create that opportunity for us. The 10-year, bam, bear flag, continuation, additional 9,600 in open interest on Friday, maintaining volume, not tremendous, but we see the market continuing to push down to that side. We are looking at a potential measured move, which is what our weekly kickoff low is, 130 and 9/30 seconds. The market looking to continue that move to the downside. Take a look at the 30-minute chart as yields continue to pop. We're just going to continue to see this. We've got a lot of overnight shorts in this market. Weekly kickoff low is 09, which is right about there, close enough for rock and roll. So a lot of overnight shorts, no real attempt to go back and close the gap, at least not yet. We got a whole lot of short time frame shorts in this market. If they're going to find sellers to come and push this market lower, I see a wonderful opportunity to lighten up on some of those shorts here at weekly kickoff low, and might be another opportunity for us to look for an execution, again, in either direction. If we reject below it, we could move higher. If we reject below it, there's no saying how much lower price can go. And let's take a look at the natural gas, which also has a late spike in it. We also have a weekend gap. It's kind of hard to say that natural gas is weak, that it's going to go lower when the rest of the world is really starving for it. But we have a head and shoulders. We have a bearish engulfing pattern. We had a bear flag that proved to be true on Friday. We lost open interest, however, on this breakout below this level. So it doesn't say that there's a whole lot of interest coming into this. And now here we are testing weekly kickoff low. This measured move from this head and shoulders, I'm looking at kind of our high from last night as the neckline. So that's going to put us down all the way back down to $4.12, which we haven't seen since back in August, which I think would be welcome for all of us that are going to be trying to heat our homes this winter if we can keep prices reasonable. I don't know how this is going to have any effect on what's going on in Europe. So as hard as it is to say that this market is setting up for a break to the downside, we're going to have to see. I mean, weekly kickoff low is in the neighborhood here, $5.15. $5.15 approximately is weekly kickoff low. We've taken a look below it. We have not accepted. Take a look at the 30-minute chart, and we'll see if we see anything here. Here's our weekend gap. Here's our late spike. Obviously, we've opened below the late spike. That should mean acceptance of lower pricing. We are up against an inflection level that includes last week's low, a point of control that has yet been checked in regular trading hours. It has now, so we'll fix that. We've looked below it. We've rejected. We're looking back at it as a support level because we've rejected this level. If we've got overnight shorts. Are they short, or are they relatively mixed? I think there's a lot of confusion, a lot of indecision in this market down here. But I know that there's fish. There are fish at this low. At somewhere in this area, there's some fish, whether that's to the upside or a continuation to the downside, yet to be seen. So I don't know how helpful that's going to be for you nat gas traders. It is in rollover, nat gas, so we just have to remember that some of the information that we're seeing in volume and open interest is not necessarily going to be what we think it is. That's the thing about these products that roll every month is you got 2-3 weeks of solid information and then a whole week of wondering what's going to happen. If it's anything like crude oil, there is the outside possibility that nat gas could get very range bound for this week as rollover continues, as the nat gas traders, the larger ones, try and get a cheap rollover accomplished before expiration, which is they've got switch day as Friday this week. We'll keep an eye on volume, and just like crude oil, the volume was greater in November when we started the day on Friday. Today, definitely December. So we'll keep an eye on that as well. All right. Charles agreeing. It feels a bit like a graveyard day today. It will then hit one big rally or sell off every week, but nothing consistent. And boy, if you miss those big moves, Charles, you're done. You're done for the day because the market just goes right to an area and then ranges in a very small range for the rest of the day. It's got a real nasty personality right now when it comes to that. So, yeah, be careful. Always think about managing risk. Harry, good to see you. And let's take our deep breath and be ready. I'm looking forward to group coaching today at 1 o'clock. We'll hope to see you there. Take your deep breath. Calm, cool, collected, humble, grateful, and creative in my trading today. And, of course, especially on Mondays, always patient. Get out there and profit today. Have a great trading day. Again, I'll see you at group coaching at 1 o'clock, and I'll see you in the pit in about 5 minutes. Be ready for the Equity Open. Hoping you all have a great day. We'll see you later.